Well, it's a major commitment of the Xi government to try to tame the financial sector and try to keep uh, people in finance from getting like super rich and to try to shift this development model. The thing is that they're not doing anything actually to change the model, but they are restraining credit. You do have to ultimately restrain credit because the return on credit gets lower and lower. So you have to spend like 8 renminbi to get 1 renminbi in GDP growth, and that ultimately is not sustainable. However, I don't see a whole lot of other ideas.
How likely is the risk of recession in China? Are they going to be able to keep the economy bubbling along? Maybe not at 5.5%, that maybe closer to 2%.
Not really, because the PBOC has done a stress test on the banks and says that anything lower than 4% and the banks start to go belly up and have lots of NPLs. So once that happens, there's sort of a cascade of bank failures.
Last week, we heard from President Xi that he was going to strengthen macro policy adjustment and adopt more effective measures to strive to meet the social and economic development targets for this year. I mean, what does that mean in reality? What's he telling the people of China?
I don't know that he's telling them anything. We've had several of these pronouncements over the since March, when Liu He, who's a key vice premier, came out and said that they would vigorously support the market and support real estate and all of these things. But the thing is, they really haven't provided any concrete measures that will do that. They have talked a good game several times. Li Keqiang held a big conference by phone with a whole lot of officials around the country and said the same thing, but you really didn't see any measures that followed it.
Yeah, construction and infrastructure has been such a huge driver of Chinese growth over quite some time now. New construction starts dropped by 42% in May, and there was a similar drop in April. Now, in the past, we've seen China's leadership really throw the kitchen sink to keep this all going. Are they washing their hands of it this time?
My sense is that Xi Jinping doesn't fully understand how critical this is, but I don't think they're wiping their hands of it, but they're not pushing a ton of money behind it either. So you get into this pro-cyclical issue where construction taxes from construction activities start to drop. Local governments have less money because they don't have the tax revenue, so they can't build stuff. And, local governments spend 90% of the money that China spends on infrastructure. So even if you were to stimulate, you're not going to get a lot of oomph out of the local governments because they have less and less revenue and lots of obligations to schools and hospitals and roads and, trying to keep people more or less, happy or fed.
A lot of trades have been made, particularly by China's big trading partners like Australia, based on the strength of this infrastructure build, the property build, and also the strength of the Chinese consumer. Do we need to be worried?
Yeah, I think so. Australia has had sort of a crack high over quite a long time now, over a decade. From the Chinese stimulus drive that started in 2009. And Australia has sold a ton of iron ore, met coal, and other things that come out of the ground and get socked onto ships and shipped off to China. And, it's been great for Australia. That is melting away.
There are huge expectations that China's middle class was going to really blossom and be the huge market for Australia's exports, particularly on the services side, that would sustain Australia in particular over the next decade. You've written, though, that Chinese households have been overspending their incomes. What does that actually mean? You've referred to it possibly being a bubble that's popping.
So I think that people have really underestimated the degree to which Chinese consumer spending is fueled by capital spending. So The Chinese consumers since about 2009 have had all this money in their pockets from selling land to the government, from flipping apartments, from the stock market, from all of these capital things, from people coming in and investing in their private companies. And so it's been really that sort of thing that's pushed this massive consumer spend. You haven't seen salaries and income go up very much. So as the capital markets come down, then so does spending.
So how safe is the financial system within China?
Well, I think that the government is hypersensitive about that, and they have a totally closed financial system, and so whenever there's stress on the system, they kind of they carry in a fire hose of cash, and they just hose off the relevant bank or the other institution with cash, and so you don't really have failures. What you have is a lot of semi-worthless renminbi that's hosed onto the system.
China's just halved the quarantine time for international travellers arriving to 1 week, but officials have been reported as saying that COVID zero will remain in place for 5 years. Really?
Yeah, they're also issuing more visas, but I think that Xi Jinping is loath to admit that this policy has not been a success. Clearly, lots and lots of people have died from lockdowns and not from COVID. The rest of the world has moved on and decided to live with COVID, and China has not. It's a form of control that the government gets used to. It's kind of like the controls that were put in place at the Olympics of 2008. The government just never dropped them because they got a little bit high on being able to control people's movements.
So is it a way of controlling the economy?
The best way to control the economy would be to end that sort of thing and to open up. But that really does not seem to be something that they're willing to do. It's a little bit curious. It does seem that the very top of the Chinese government is impervious to argument.
And what about China's central bank? I mean, we're at a phase now where all the major Western central banks are hiking aggressively. They're dealing with inflation. They're pulling back their balance sheets as well. But it seems like China's central bank is going the other way.
Right. So this is a key problem with needing to provide stimulus. If your policy is opposite to the policy of other major currencies in the world, particularly to the US dollar, then it's going to put a lot of depreciation pressure on your currency. And you're going to eventually get capital flight. Your incoming commodities are going to be very expensive. And that's something that China sees as a huge headache.
So how worried are you about what's happening in China economically? What do you have as your base case outlook?
I'm sad about China. I think, there was a slim chance that it would continue to open to the world and become more economically liberal and more politically liberal. I never thought the chances were very good, but I hoped, and now it's going totally the other direction. So that's not good economically, and it's not good politically. So my base case for China, I think that the Chinese economy is really going to go through a crash, and I think that China is going to spew deflation into the world pretty soon, like along about third quarter this year.
Why so soon, and why is it going to be so contagious?
Because as demand for commodities goes down, China is responsible for a huge amount of commodity consumption. And so as their demand declines, then commodity prices decline, and that's an international effect. But I think the key thing is that the renminbi has got to depreciate. And as the renminbi depreciates, that's what pushes deflation into the world.
And the central bank and the government won't be stepping in to stop it?
They are already. They're intervening rather heavily, it looks like to me, but you can't stop it altogether.
And Stevenson Yang, thank you so much for your time.
No worries. Nice to talk to you.